The Australian dollar was volatile this week, trading from about 71.50 to 73 cents, though it spent most of the week around the 72-cent mark. The highs for the Aussie came after Australia's much stronger than expected first quarter GDP reading. The headline number was growth of 1.1% on the quarter, 3.1% over the year. That's the fastest annual growth since the third quarter of 2012. Yet the Aussie dollar rally after the GDP data fizzled out, and pricing for another RBA rate cut remains 100% by December. The key was the details of the report. They show that the Australian economy is very reliant on exports for growth at the moment, and also that price pressures across the economy remain very weak. Although it is encouraging to see exports benefiting from the lower Australian dollar, the second quarter isn't likely to see quite such strong export growth. Consumer spending continues to grow, but not at a very rapid pace. Business investment, meanwhile, continues to contract. So the domestic economy is rather mixed. There was also some cause for concern in the update on price pressures in the national accounts. Mostly when we think of inflation, we think of the consumer price index. In the GDP report, we get prices across the whole economy. And in the first quarter, this showed that inflation was actually negative over the year, down 1%. The national accounts show that the economy grew by 2.1% before adjusting for inflation. And because prices fell by 1% over the year, we get the 3.1% inflation-adjusted number. So while the RBA will be pleased to see that growth continues at a healthy pace in the Australian economy, they will be concerned about inflation continuing to undershoot their 2 to 3% target. And when inflation is so low, clearly wages growth is weak as well, so it's understandable if consumers don't feel as though the economy is growing particularly quickly. In the week ahead, the highlight will be the Reserve Bank meeting on Tuesday. Markets are now pricing less than 10% chance of another rate cut. But there'll certainly be interest in the statement for an update on what the RBA is thinking about the economy, inflation, the Aussie dollar, and the housing market. In the US, the calendar's relatively quiet, but overall we suspect that pricing for a Fed hike as soon as June will continue to wane from its current levels around 20%. This should undermine the US dollar and help the Aussie dollar find support on dips towards about 71.50 and again capped around 73.50 for the week ahead. We'll speak to you next week.